Consider the situation in mid-2021, when Bitcoin has just surpassed its all-time high and shows no signs of slowing. The final destination is visible. The mood is unmistakably insightful. Now that you've gotten this far, you realize you've never given much thought to the most crucial question in cryptocurrency investing. When is the best time to sell? You fly past the moon and worry as you are dragged back to Earth, where you watch in horror as all of your gains are consumed by the atmosphere of craze and funny money. This is Crypto Clips, and today we'll go through a few measurements you may eventually use to plan your own ultimate altcoin exit strategy, regardless of what altcoin you and your fellow astronauts are holding. When the time comes, it is our mission to assist you in landing on the moon. Before we enter the simulator on the moon, disclaimer: this video does not contain any financial or investing advice. Therefore, everything you see here is strictly for educational and entertainment purposes. When the time comes, it is up to you to complete your own training, which entails conducting your own study. If this is your first visit, welcome to Crypto Clips. We do a lot more for prospective crypto clippers than just perform simulations. We look into cryptocurrencies, walk you through trading sites, and break down DeFi protocols, among others. If this is the kind of thing that gets your heart racing, hit that subscribe button. And pinging that alarm bell will make you sure you don't miss a beat. Alright, it's simulation time, comrades, so buckle up. What is the best way to create a bulletproof exit strategy? It's critical to first comprehend the asset in question. Putting everything into context is the first step toward understanding. Numerous financial markets, housing markets, foreign exchange markets, stock markets, and thousands of others make up the global economy. Almost all of these markets follow some kind of visible cycle, which can last a year, 4 years, or even a year and a half. These longer cycles can sometimes be broken down into smaller cycles that last a few months or even a few weeks. These cycles have a tendency to also change over time, with longer cycles becoming more common as a market matures. The cryptocurrency market is still in its early stage, which makes it extremely volatile. This is due to the fact that no one knows for certain what the market's true value is. Much of the wealth in the world's financial markets is held by older and more established investors like Warren Buffett. These investors are generally more cautious and less willing to take risks with their investments, particularly in new markets involving technologies they are unfamiliar with. MasterCard withdrew its support for Facebook's Libra project because of this. When you don't understand how money is made, it gets made in ways you don't like. As stated by AJ Banga, CEO, younger investors such as ourselves and many others are more tech savvy. We understand how Bitcoin and many of the promising altcoins in the space work. When it comes to our beloved alt currency, we're also more prone to taking risks. And many of us have significant opiate addictions. Suit and tie traders aren't the only ones that participate in cryptocurrency markets. All you need is an internet connection to join, which means a lot of inexperienced investors. On a daily basis, this makes the Bitcoin market even more volatile and illogical. Despite the daily volatility in the crypto market, there is a rather clear market cycle when you take a step back. Depending on how you draw your indicators, this cycle appears to span roughly 4 years and comprises of a 2 to 3 year bull market followed by a 1 to 2 year bear market. The Bitcoin debacle appears to be to blame for the cryptocurrency market cycle. The Bitcoin block incentives for miners are slashed in half every 4 years, in case you didn't know. The rapid fall in supply will eventually result in a price increase for Bitcoin, assuming the demand remains at the same state. Because most cryptocurrencies are heavily associated with Bitcoin, they see a big upswing around that period. This increase in value is reported in the media, attracting even more money into cryptocurrency markets from both experienced and naive investors. The most recent halving occurred in May of 2021, causing many to predict that the crypto market is about to undergo another major shift. Some could argue that we're already there, and you'll see why. Unlike the previous 2 cycles, The crypto market now has more smart money from financial institutions and seasoned retail investors than ever before. This is due in part to government regulators around the world who have begun to do their homework and recognize that cryptocurrency is much more than Twitter breaches or ransomware attacks. And the cryptocurrency market now contains anywhere from 6,000 to over 7,000 coins and tokens. The total market capitalization of all these assets is currently over $400 billion. Of course, Bitcoin, with a market valuation of roughly $240 billion at the time of shooting, takes the lion's share of this, in comparison to other financial markets and markets for analogous assets, such as gold. The cryptocurrency market is quite small. The foreign currency market is estimated to be worth $6.6 trillion. Gold's market capitalization is at around $9 trillion. Many have taken advantage of this market disparity to demonstrate that the Bitcoin business still has a lot of space for growth. Now that we have a firm handle on the Bitcoin market, let's move on to the next step. It's time to examine the individual assets included within it more closely. Bitcoin. Bitcoin, as we all know, was the first cryptocurrency and is still the largest and most popular by far. As a result, every other cryptocurrency is referred to as an altcoin. Why? Even during the next bull run, the possibility that any altcoin's market cap will surpass Bitcoin's is quite remote. This is the single most important reason. Bitcoin is where the majority of institutional and experienced retail investors are putting their money. Companies like MicroStrategy and Square are unlikely to buy the dips on cryptocurrencies like Chainlink or VeChain in the near future. Even Ethereum is having a difficult time attracting serious investors. This appears to be partly due to the imminent release of Ethereum 2.0, which has some significant investors, such as Grayscale, declaring Ethereum 2.0 a material danger to investment. Bitcoin is far less volatile than altcoins, and its volatility has been slowly declining over time. Furthermore, its price movement has a big impact on altcoins. When Bitcoin rises, so do altcoins. Many altcoins, especially ones with a smaller market, suffer short-term losses when Bitcoin rises too quickly. Why? The reason for this is because the vast majority of money invested in altcoins comes from crypto clippers like you and many others looking for the quickest route to the destination. Many of us abandon our ropes and race to the Bitcoin shuttle when we witness Bitcoin take flight. As a result, when Bitcoin's popularity fades and its price falls, everything comes crumbling down. When Bitcoin is gradually gaining in price or trading sideways, altcoins likely to reap the highest profits. This is partly due to opportunistic investors becoming dissatisfied with the price action of Bitcoin and other large altcoins, and moving closer to the deeper and more turbulent waters that lay beyond the top 10 or 20 altcoins. These Bitcoin-altcoin interactions are crucial to comprehend because your ultimate altcoin exit strategy begins with the realization that it will be highly influenced by what Bitcoin does. Bitcoin's market cap effectively sets the top limit for where your altcoin can go. While it's true that Bitcoin's market cap will certainly continue to rise as the bull market moves forward, selling your XRP when it reaches $1,000 isn't a viable exit strategy because that would give XRP a market valuation of more than $50 trillion, more than double the size of the whole US economy. Okay, now you have a better understanding of how Bitcoin's price movement affects altcoins. And you've probably realized your favorite coin's market size will probably never surpass Bitcoin's anytime soon. Taking your tokenomics into account, the US dollar would have some of the worst tokenomics in the crypto industry if it became a coin. It has a year-on-year inflation rate of roughly 3%. It has no supply limit and can be created by centralized authority at any time. Furthermore, a few number of persons own the majority of the circulating supply. As a result, it is a bad long investment, prompting one of the largest collective escape strategies in financial history known as cryptocurrency. Cryptocurrency. It's fascinating to think that practically every crypto coin has its own tokenomics. Furthermore, because many of the blockchains on which these cryptocurrencies are based are open source, everyone can see exactly what is going on with their preferred tokens. This level of transparency is uncommon in traditional finance, so it's a breath of fresh air. It also demonstrates that the cryptocurrency field is not immune to the same corruption and greed that plagues our present monetary systems. Many cryptocurrencies have strong development teams working products and platforms with well-defined and useful use cases, and even relationships with a number of well-known international institutions. Factors of tokenomics. For the purpose of this video, we'll merely focus on the major tokenomic considerations that you should bear in mind when devising your ultimate altcoin exit strategy. First, allocate tokens. Every cryptocurrency has its own token allocation, while a mere handful have none at all. Instead, at the start, a genesis block was mined by one or more parties without any particular token distribution. This is referred to as a fair launch, which is sadly rather unique in the crypto world. The majority of today's cryptocurrencies featured a component known as a pre-mine. This usually entails distributing a defined percentage of a token's initial or total supply to specific parties or causes. Some of these tokens go to the project's creators, while others go to investors, and the majority of them go to the ICO and mining or skating rewards for individuals who participate in the cryptocurrency ecosystem. Take note of how these tokens have been assigned in the crypto project's ICO documents while looking at the altcoin you're holding, and then check to verify if these coins have been allocated in the way that was originally specified. This may be done with the help of a block explorer, which you can generally find on your altcoin's website. If your altcoin isn't on ERC20 token, you can use either scan to see what's going on behind closed doors. Your goal is to figure out which wallets are holding a high quantity of tokens and whether those tokens might be sold quickly if the price was dramatically boosted. As a result, tokens assigned to opportunistic venture capitalist funds or angel investors are likely to be among the first to disappear. If a single wallet controls more than 10% of a token's entire supply, you should reevaluate your altcoin selection. However, some cryptocurrency projects have vesting timelines in place for tokens that have been awarded. This means that the tokens issued to investors or founders will not be available immediately, but will be available throughout time or at a later date. The worst example is Solana's vesting schedule, which is still the creepiest thing we've seen this month. If you encounter a vesting schedule like that, you should consider selling your tokens as soon as possible. Second, there's inflation and then there's total supply. Inflation isn't necessarily a problem, as long as it's modest and you're not planning on selling when you retire. It's also worth bearing in mind that several projects use inflation to motivate network membership. If you plan on keeping your tokens for a long time, you can occasionally avoid this inflation by staking or delegating them. However, the type of aggressive token inflation utilized to pay liquidity providers in many DeFi protocols will most likely suffocate your shuttle's engines before it even takes flight. It is essential to heed the wise words of Yearn Finance's developer, Andre Kroner, when dealing with these tokens. Don't buy it yearned. When it comes to yearned, the Wi-Fi token may be the best example of how significant supply measures are to a token's price. Wi-Fi is one of the few cryptocurrencies with a price that is higher than Bitcoin's. The basic explanation is that the token's demand is exponentially more than the token's maximum supply of 30,000. Who wouldn't want to possess a token that allows them to influence the operation of one of the best DeFi protocols? Because of the limited supply, Wi-Fi's market capitalization is under $400 million. Furthermore, all Wi-Fi tokens are on action. There are no more Wi-Fi tokens available for mining or issuance. Wi-Fi had a fairly decent start as well, with no pre-mine and all tokens obtained through year.finance liquidity providers. Some have dubbed Wi-Fi the Bitcoin of DeFi because of these traits. In some cases, be sure altcoin has a fair launch or, at the very least, a fair pre-mine with a vesting schedule that doesn't make you want to flee. Until you decide to sell, make sure inflation isn't too high and investigate if there are any measures to lessen it. Also, if there is a maximum supply, keep track of the circulating quantity versus the maximum supply. Otherwise, your token may lose value as more coins flood the market to drawn out demand. Last but not least, technical indicators. To conclude designing your ultimate altcoin exit strategy, you must consider what the technicals are suggesting. If you've ever viewed a video about exit strategies, you'll notice that the majority of them rely on technical indicators. While technical indicators can be highly valuable, their value diminishes when other essential criteria, such as the ones we've discussed so far in this video, are not present. Furthermore, depending on the time frames you use and the method you draw your trend lines, technical analysis can suggest different trends. Whether it comes to selecting when to exit, there are two technical indicators you should pay attention to. Two technical indicators. Number 1. Bitcoin's dominance. The amount of cryptocurrency's total market cap that is accounted for by Bitcoin is known as Bitcoin dominance. It's approximately 60% in 2021, and it's been progressively falling since September of this year, when it was just over 70%. During the last crypto bull run in 2017 and 2018, Bitcoin's market share dropped to just 37%. This is significant since the massive quantity of money flowing into cryptocurrencies is one of the reasons why many altcoins experienced that all-time highest at that time. If the decreasing trend in Bitcoin dominance continues, another sharp decline in Bitcoin dominance could occur over the next year or two. If something like that happens, it would once again flood the altcoin sector with money, propelling several alts to new heights of theft. Big decreases in Bitcoin dominance have historically lasted 1 to 2 weeks, which means you'd have plenty of time to escape if that's part of your ultimate altcoin exit strategy. Number 2. The worth of your altcoins in comparison to Bitcoin. The majority of us are concerned about the dollar value of our preferred altcoin and prefer to trade against a stable coin such as USDT. While this makes it easy to keep track of our portfolios, the value of your alt currencies in Satoshis is the best indicator of whether your cryptocurrency is increasing in value in comparison to other crypto assets. Let us share a simple anecdote that we've all heard. Assume the dollar value of your favorite altcoin has been increasing. You're in good mood, and the keys to that Lamborghini begin to materialize in your hands. Then you look at the rankings and notice that other altcoins are producing even better gains, while your favorite is barely keeping up, if not lagging behind. So what's the deal? If you had looked at the Bitcoin pairing of your alt currency more closely, you would have noted that while the dollar value of your altcoin was increasing, the Satoshi value was decreasing. Other altcoins, on the other hand, had been increasing in value in Satoshis. Again, the time frame you pick to study this trend may have an impact on whether it continues to rise or fall. If you're lucky, you'll see a distinct trend over a short to medium time frame that will tell you whether your altcoin is worth genuine money or dirty feet. Keeping a careful check on Bitcoin dominance and the movement of your altcoins against Bitcoin can aid you in determining when the optimal time to sell is. Now that we've gone over all of the criteria, you're ready to create your own ideal altcoin exit strategy. It's time to put the simulation to the test. Let's pretend Clippers coin is a cryptocurrency. Clippers coin now has a market capitalization of $100 million, just making it into the top 100. It, like other altcoins, is heavily tied to Bitcoin, which has a market worth worth of $300 billion at the time of writing. Now, you really like Clippers coin, but you know it'll never be as big as Bitcoin. And you're not sure it'll ever be as big as Ethereum, which has a market worth of $50 billion. As a result, if it were to suddenly go parabolic now, you can bet it wouldn't be able to pull off a 50-fold price increase, as it would make it as big as Ethereum. Clippers coin has a 50 million starting supply and a 100 million maximum supply, with a current value of $2 per token and an annual inflation rate of 1 million coins. Clippers coin might take up to 50 years to reach uncharted territory. 100% of Clippers' initial supply is currently available for purchase, with 20% reserved for your friend Mad Mike, who was an angel investor in the business at that time. But he won't be able to touch his tokens until January 1, 2022. So you know it'll be a good idea to sell before then, because Mad Mike is obsessed with dirty feet. Let's fast forward to Christmas Eve 2021 on December 24th. Clippers coin has already increased in value by 10 times in the last few months, making each token worth $20 and the market cap slightly over $1 billion. Even though F2.0 has yet to be released, Bitcoin's market valuation is just under $1 trillion, and Ethereum's is over $500 billion. Bitcoin's supremacy caused a steep dip 1 week ago, and money is rushing into altcoins, implying that the trend will reverse in less than a week. Clippers currency's pairing with Bitcoin could be better, but if you look closely, you can see a modest rise on the one-day timescale, and Clippers coin has jumped to about $24 in the time it took us to write this. You believe a 20-fold increase from our initial investment is probable, but you believe that many traders will sell Clippers coin at the psychologically safe level of $40. You place a limit order to sell your Clippers coin at $33.33 to be safe. You go to bed with a painful number on your mind. Then you realize it's Christmas morning and your Christmas wish has been granted. Clippers coin reached a high of nearly $45 while you were sleeping before plummeting to $22. It would have been wonderful to sell the high, but that's impossible. Price is currently negative, and all indicators point to a massive correction across the board. While Mad Mike screamed at the top of his lungs from the other side of town, you sat back and sipped your Christmas coffee. It only took a little research, some planning, and a lot of talent. Now all you have to do is figure out how you're going to afford the Lambo without getting blasted by taxes. Okay everyone, that's it for today. We hope that this video aids you in devising your final cryptocurrency exit strategy during the impending bull market. Give that like button a click if you enjoyed today's simulation. Also, if you haven't already, subscribe and ding that notification bell. You won't want to miss out on a lot more that's coming next. Subscribe to our channel Crypto Clips if you want to see exactly what we've got planned and learn a few extra crypto tips and techniques. Crypto Clippers will see you in the next one.